Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I'll be taking you through two paper money trades today on two high-profile names in the news. Number one, Tesla, and then we'll look at Google Alphabet that had a major purchase today. So first, let's get to our first trade, paper money trade of the day, and that is Tesla. Now, Tesla, if you look at the chart, 3 months down 48%, 1 month down 36%, and sitting at current RSI at around 29.5. It rallied for a couple days, but now down yesterday, down today. So how do you play something that could move in a large way in either direction? Here's one way to do that. It's called the back ratio. So the trade we looked at here, going out to the April 11th. So gave ourselves a little bit of duration here, 24 days. Sold the 200 call, sold one of the 200 calls. Then looked at the expected move till April 11th, currently at $39. And so sold the 200 call, bought two of the 240 calls. So short a call vertical, and then long an extra call unit. Now, I put that entire package in, the 1x2 back ratio, for a $10.75 credit. Trading about $10.30 now, but trading north of $10. So, what is the idea here? The idea is you want to move as big as you can get in either direction. On the downside, if it breaks 200, you would simply keep the credit on this trade. On the upside is where things get interesting, because you're short a call vertical, but you're long an extra call. So eventually, the long gamma turns this position to a long delta. And because you have an extra call unit, the upside potential is infinite on the upside. The risk on this trade, and there is risk on this trade, is a move right to that long strike of $240. That's where the 200, 240 call vertical would go to full value, and the other call would go to zero. So you're looking for a big move in either direction. Upside, you have infinity. Downside, you would keep the credit. So that is a move in Tesla. Again, the risk is a move to the short strike, a lack of movement, or a move to that short strike of $240. And you are paying theta on a daily basis, not collecting like we have in a lot of the trades we do. All right, that's our first trade of the day, the back ratio. Now, the second one, Google Alphabet. Google Alphabet has a $32 billion all-cash buyout that announced this morning for the cybersecurity firm Wiz. And so looking at a downside move, it opened relatively unchanged. If you look at the open at 163.67, only down very slightly, but it has sold off dramatically since then. So what we looked at in terms of Google Alphabet, a stock that, again, like a lot of the Magnificent Seven names, 1 month down 14.5%, 3 months down 17%, 1 week down 5.8%. So we looked at a call diagonal in Google Alphabet, buying the April 4th, not going out very long, and we're keeping our durations relatively short now because implied volatility is high, right? And the longer you go out, the more exposure you have to Vega. So there's one thing to consider when you're buying premium or Vega in this market, is keep those numbers to it, because if implied volatility were to go down, these spreads would underperform, let's put it that way. So Google Alphabet, buying the April 4th 160, selling this week's 165 call. I put that in about $4.50. It's trading a full dollar lower than that right now, trading about $3.40 right now. Again, this is a trade. You're looking for a move towards the 165 strike. Maybe can you adjust your strikes? You don't have to. It's not that far away from 160, but you can if you want. Buying the 160 call, selling the 165. The risk on this trade is whatever debit is paid. And you're looking for a move during this week up to the 165 strike. So the risk on this trade is the debit paid. Again, this one is collecting theta. However, you are long about 31 deltas in Google Alphabet. So this is without a doubt a bullish trade. So those are our two trades for today. A back ratio in Tesla looking for movement in either direction, and a bullish call diagonal in Google Alphabet looking for a move back up towards the 165 strike. That's our show for today. Have a great day, everyone. We'll see you tomorrow with another edition of Daily Trader. I'm Kevin Hincks.